Welcome to Things to Invest. We're talking about investing, finance, and professional development. As a recording time of 10:39 a.m. on the Eastern Time, Ethereum contained $3,792, down about 4.15% so far. On the overall crypto market, you can see clearly on the left side of the chart, it's bright pink and red today. Obviously, from the UK interest rate hikes news earlier today, adjusting from 0.1% to 0.25%. So it's almost like a 1.5x multiplier onto the interest payment. And with that affectation will obviously drive some hindrance onto the earnings potential on the margins compression to corporate companies, right? And despite U.S. Have no intentions of hiking interest rate at the current moment, we did taper, from the $120 billion of asset purchasing to $30 billion, which is a sizable shave, right? But Jerome did lay out that we will be having three specific interest hikes next year. But in terms of timing, he didn't really specify, nor do we have any confirmatory signal on what does that proximity look like, right? Is it going to be Q1? Is it going to be Q2? How is it going to be sprinkled across the next fiscal year, right? So why am I doing this second video so promptly already, knowing the fact that I just posted one about 3 hours ago, is because I want to correct the mindset that we all collectively have, right? As I look into the comment section and just people texting me, reaching out to me. I actually have friends actually text me and reach out to me saying like, hey, what's going on? Right? Should we be holding? Should we be selling? Should we be buying? Like, what are we doing? Right? I want to make sure that we are correcting our mindset to stay away from the emotions roller coasters that we're having, right? And just stay within the logical frame of reference, right? And the reason that my work is so, has such high efficacy to you guys and you guys find it helpful is because technical speaks the truth, right? And I am able to translate and read technicals efficiently based on my experience doing this for close to a decade. And that triangulates into the truth, I guess, in a way, right? Incorporate both the macro and the micro perspective. And I do not want you guys to be making the irrational decisions and regret, right? Which I believe a lot of people have done in the past. Like the major lessons are, or if you look into your history, whenever you sell is typically because you sell on fear or because you panic because you're down so much. It is rarely because you are seeing such a high inflated profit. I think people typically are, more active when they're, the flight and flight, triggers internally in a psychological perspective. So I want to just like come back and do the technicals again, despite the interval time frames. And I would say the dynamics of the situation is still, is shifting slightly, but let's dive into it to talk about more specifics. So respective recording time of 10:42 a.m. on the Eastern Time. Ethereum's current trading $3,794, down about 4.11%. You could see clearly we did test the level that we have talked about earlier this morning, right? The 3,650. But we got bounced off relatively sharply as we got there. We were at the 3,678 for like, I don't even know, like 2 minutes, right? And immediately got bought up. So it was like a blink of an eye type of thing. It seems like some people are probably watching my videos or some people have been, looking into technicals, and that's the level that, the highest appetites in terms of the new proximity, right? If you look at historicals, you could see that we were testing that around for several times in durations from September 14th all the way to October 14th. So it's like a 1 month of separation of just consolidate on sideways fashion around that level. And right now we are contemplating, do we go up back to the 3,850? So that's a relatively sizable spread, right? For the percentage in terms of Ethereum, right? So I think the 3,650 was the dip, right? And never sell on loss, right? I think, despite some people bought at the peak, right? The 4,870. We are not wizards collectively. We have no, unless you have superpower that could predict the future. But no, I mean, I don't. I can just be honest with you. I don't have superpower to predict the future, right? But we can only look at this in a risk management perspective, and it would be a very, very irrational decision, not the logical decision, and frankly foolish to be selling at the moment when we are very depleted. I think you should be thinking the opposite, right? The fear is what's driving the main catalyst, is driving this main rationale on this sell-off, not because of specific fundamentals with respect to these assets, right? The value proposition has not changed. Nothing has really changed. It's just because of fear and uncertainty from the interest rate hikes, the inflations, both from US and UK and even China too, right? On the delisting potentials. There's a lot of money being thrown out because of the sector rotations, the window dressing, and today is a quatch riching affectation as well. So there's some volatile activity in the options market on both the equity and the crypto side as well. So there's a lot of triangulation that's in place right now. It's very convoluted, right? And that's why, I don't want you to be going crazy trying to figure out everything, because time is all of the essence as well. You have to think very quickly and sharply. And what always works for us is to look into the technicals that speaks the truth, right? So I think right now, like placing your order anywhere up from the 3,850 to 3,650, which is a level that I know some people actually bought in, 3,475. These are the levels that we're in. I think, the pain is still enduring, but I think we're the near end of the pain. I think we are on the verge of, actually rebounding nicely. So don't, don't think that we're in a bear market. I think we're still in a bull market. Across various different technical signals that we're seeing right now, there's no reason to be to think that we are in a complete opposite side of the spectrum right now. I mean, people typically get polarized when they see craziness happening on a consecutive fashion. We've been seeing this ever since November, like beginning of November, all the way till now. So it's been like a month of just like pain and suffering, right? And again, fear mongering or panic is never a logical thing, right? So respect to Bitcoin is currently down about 2.43%, breaking down. Now you can see that clearly we were testing around the 45. This is exactly what I said, right? 45 is a flat number, so this was not really a substantive level that we bounced off of, right? The real level is 44, to be honest with you. But we bounced off at 45 because that's the flat number. That shows that there's still a lot of appetites around the market for crypto. We're very depleted, right? That's also another reason why we bounce off at that level, because when we were at 45, we were basically below, like somewhere around like 32-ish, right? But we got reversed up, and you could see how fast we reversed up, right? That's why you don't even see it in being reflected on our RSI scale. But I would say, we're still bullish because of the cross section that we're going upward right now. So I think overall market is still bullish in the crypto perspective, despite how negative it sounds like or looks like so far. Dogecoin anywhere from the current level all the way to the 15. I don't think 1302 make any sense at all. I think right now it's still not a terrible level to incur risk at 38 out of 70. So not bad. I would say Dogecoin should be reversing shortly. Cardano's down about 1.11% right now. Hovering, you could see that we're clearly consolidate between 134 and 120. And the reason we're doing that is because of the frames that we have identified so far based on historicals. I don't want to go back all the way, but that was the level that we've had. That's why we laid it out here. I don't see 102 anytime soon. That makes no sense at all, because there will be drilling oil, which you saw. I think 25 is the bare minimum. I think 118 was basically the dip, right? Obviously, because we're very oversold. So 102 would make no sense if we actually get there. Solana's down about 6.38% right now, reversing from the level that we were surging to try to get to 200, but we couldn't, obviously, with the 43 out of 70 curving up right now. So Solana, I think, is kind of a mixed bag, but I think it's still bullish overall. Again, right, the better dip was at the 155 to 149, right, which is the level we got to. So hopefully you guys were able to get some, scoops when we were selling off in the previous days before the FOMC meeting. XRP is down about 4% right now. Again, we're hovering between the levels. We are on the verge of breaking the the 79, but I don't think we're gonna go down to 69 because like that would be very oversold. I think the worst that we could get to would be probably 75 because it's a flat number, like 75, 85, like the fives are typically the flat numbers, but I think we're pretty much at the bottom for XRP right now. Polkadot is down about close to 9.12%. At the moment right now, we are cracking, but from the 25, so that's why we're a little bit below, but I will give it a benefit of the doubt that we're at 25 right now. But the bottom technically will be somewhere around like the 22, high 22s to 23, basically. And I think we're technically at the bottom already for Polkadot's. ALGORAND's down about 7% respectively. Bottom is basically 130, so incurring some risk right now if you believe in this assets long term. It's not terrible right now. Shiba Inu is down about 4%. I think anywhere from 2,900 to 900 is still a good dip with the 35 of 70 right now, so it's not terrible. But again, right, this is more of a meme-like animal, so it's up to your risk aversion, really. Polygon's down about 1%. Anywhere from 175 to 143 is still the level I would incur risk at. AVAX up about 11%. I know some of my friends here actually are making some great returns right now on a profitability perspective. It's great. For those actually took the advice, not my advice, just technical speaking the truth. I don't give any advice, right? Because I'm not that smart. It's 79 to 60 is still the level that I would incur risk at with the 60 out of 70. So I'll probably wait and just hold. I think we might still see some more surge, possibly to like retesting 130 again, and I think that would be a good level to dollar cost. To take some profit, if you may. With respect to risk management level, these are the levels of dollar cost average at. Again, right, do not make decisions that you will regret. Right now, I know it doesn't seem like it is, right, but fear, sell-off, panic is never logical. Right, if you believe in this long term, there's no reason for you to sell off just because it looks red, just because you're down like, I don't know, $6,000, just because you're down like $70,000. It's paper loss, right? Eventually, you're gonna go up from there, and that's the reason why you invest, right? Long-term investing, the patience will always beat out any volatility in the near term, right? And I think the overall market is gonna self-correct. We're gonna revive slowly. But it's going to take some time gradually. It's not going to be like a sudden fashion. And for, if you see something that's suddenly surging really, really high, doesn't that kind of give you a red flag that there might be something fishy going on, right? So I would say this is normal. The entire market is doing what it needs to do, right? It needs to go through the homeostasis and then subsequently, allow for the replenishment of the monetary circulations. All right, so that's it for the second one of today. And let me know if you have any questions again. Again, stay strong. Don't make any decisions that we regret. Okay, stay strong, guys. Take care.